All right, what's going on, everybody, and welcome to another episode of the Market Misfits podcast. As always, I am your host, Joe Shiva, joined once again by my partner in crime, Alec, Smiddy, Fed Rate on Smid. How you doing today, bud?
I am doing fantastic. How are you doing?
I'm good. The last episode that we did was, actually, technically the last Market Misfits episode was my origin story, which was very odd to do, I guess, for me. I'll be honest.
It was fun to hear.
Yeah. I mean, I know you know most of all of that, and there was so much stuff that I left out, mostly on the gaming side, just because it's not really relevant to the trading end, even though it's relevant to me as a person. Maybe one day I'll dive into, because, bro, the stories are just, they're disgusting. The gaming industry was a very weird place, and the stories are nuts. Like, right. They're pretty wild.
At that point too, it was a very immature market, right? Like, that was all very new people, the teams going public and actually building and expanding, correct?
Yeah, you had so much money being thrown at it. We're talking $25-50 million in investment to, smaller people that have never seen that kind of money, really. And then you had VCs come in and start to plant their people in there thinking they knew what they were doing. And then you had the people that were actually in the industry that thought they knew more than they actually did. And it just turned into an absolute shit show where it just, and it got really bad because it just turned into like almost, for lack of a better term, a dick measuring contest on some stuff. Like, right. Oh, I have this much money, so I can go spend X amount of dollars on this. Like, even on like player contracts, people getting bidding wars like they're in the NFL. And I'm like, we're not the NFL. Let's not bid against each other, because if you bid this guy higher and then that sets the market and then that happens again and so on and so forth, now you got guys making $2-3 million a year playing a video game and we have no revenue to make off of them. So it's a fixed cost, right?
It sounds like a nuclear reactor company I know of.
Yeah, it sounds like pretty much the stock market and everything else that we do, where most of these companies have no revenue and we just pour money into them. But I digress. So yeah, if you guys haven't checked it out, you want to hear, part of my story, was the previous episode. Go check it out. But the last time Smiddy and I spoke, we were talking before the holidays. We were talking a bit about whether or not we would see the whole Santa rally. And I mean, we kind of did, right? I guess you could call the Santa rally, I don't know, kind of successful. I don't, if I go pull and see what we did there in those days, we kind of drifted higher.
I would say the post-Santa rally has been much more fruitful for most people, to be quite honest with you.
Yeah, I didn't trade a whole lot during that time. I sold a lot of premium for the most part. But yeah, I mean, we kind of drifted higher from the 19th into, Christmas, and then faded off a bit, post-Christmas and the New Year. So I think most people consider the Santa rally like Christmas through New Year's. So I guess that would have been a fail, right? If we went lower. Yeah. But either way, it really didn't matter. Volume was pretty shit. Everything was kind of light.
Right. Also, let's be honest, really hard to be hoping for a rally at the end of a year that, quite frankly, was pretty good across the board. Yeah. It's you're kind of asking for the cherry on top when you got the whole Sunday in front of you, and you're like, but I'm missing the last thing. And it's like, no, I think honestly by Christmas, I think you should have caught it, to be frank. So
yeah. I mean, I had some swing, positions that I think we talked about were on the indexes where, I was pushing for maybe us to kind of drift higher, and I closed those before Christmas. Then I did a little bit of premium selling, but it just, wasn't a sexy time to trade. Like you had said, most people, I think, shut their shit down end of November anyway, depending on what kind of trader you are. This was all retail, just doing retail things.
Right.
And now we're into a new year.
Right. Well, and you get the end of the year, a lot of these younger folks especially have this newfound free time as they get into their winter break. And what do? Hey, let's go gamble, whether it's Robinhood, stocks, or, go hit some of the poly market bets. So that's something I think we see. It'll be interesting. It's going to be interesting in the first quarter, I think, for a lot of us to see volume normalize again, because December was so choppy and just a lot of low volume days, a lot of nothingness,
Yeah, and we kind of had that even to start the week. Like today was like the first real day where I think Jay was like, "Yeah, we're seeing some actual action." I think volume overall, from like an average perspective, if I check, was it was better today. Looking at some of the volume, it was better than expected. I think for a lot of people, um, so it wasn't too bad. But you're starting to see now what 2026 might shape out with some of the bets coming forward. Problem is, most of the bets we've seen so far have been people chasing names that are already green, which always sucks. But I'm curious to see what kind of fresh takes we see as we kind of go into the new year, and we're going to probably do an episode on the expectations for 2026, kind of what we see, I think next week. And what I guess the big players are calling, right? No, Tom Lee over here. What's your number? SPX 9,000? Who knows? Over 9,000. That would be sick.
Yeah.
But
over 9,000. Get out of here.
Yeah.
You're going to have to.
Come on. You got to get the reference.
Do the meme right there. Yep. I love that.
Yeah.
You're going to have to crop him on
Pop that in there, right?
It's over 9,000.
Yeah, that'll be good.
We finally pushed a new all-time high here on SPX, which was exciting for a lot of people. We'll see what they do tomorrow now to see if they kind of retrace this a little bit or if we just keep on moving. But you were also noticing some weird stuff you said in the commodities markets, right?
Right. And it ties into what you were just talking about with the breadth that we have. And this was, again, someone else had noted this. I caught on to it and was like, oh man, I hadn't put the two and two together. But on days like this, when we see the entire metals complex running, especially copper, right, which they tell us two different stories. Copper pricing going up, usually expansion, economy's good, we're growing, we're building new buildings, right, infrastructure spending, think. When we see the metals going up, it's the complete opposite. We're thinking safe haven, something's on the horizon. I want to conserve my buying power. That's weird. Something's weird about that. And that, I couldn't put my finger on it. It might just be, and as I think a lot of, CTA and commodity traders would say, when you hit a super cycle, a commodity super cycle, it doesn't need to make sense. You need to own the physical metal, the physical thing, so that you can continue production, bring product to market. It's something to note, right? And I think I come into this year with a book that needs to be reallocated. I'm mostly cash at the moment, and it's a little tough because your new year to date measures. However, I don't forget last year. We just came off a really amazing year. It's still hard to chase some of these names. Granted, we had some amazing opportunity in the first couple days, Friday, and then into the first 2 days of the trading year. Some of these names, SMR was one I had on the shopping list, I think is already up 25% year to date. Might get a pullback. That thing could run for another 3 days and it'll be plus 75, by the end of next week. But I'm a little cautious here. And my caution comes from mostly the metals complex, where we have some exposure, always have some exposure, but demand has not cooled. And Joe, if we want to hop in, we can cover this now, but I had a little bit of research on the metals market.
Yeah, so that's what I wanted to do. This is a good lead in. So like the two main topics that we wanted to cover today on this podcast episode, as we try to make them a little bit more focused, is I want to talk about what's going on in silver, right?
Right.
And then we want to talk about what happened for those that have been paying attention to Mr. Captain Condor and all of the Iron Condor 0DT trades and how that blew up over Christmas. Those are kind of the two main things we wanted to cover. So I think this is a good lead in, right? You're talking commodities, some of the weird stuff you saw. Silver has been on a wild run, like full transparency. I'm still long my silver position that I got this year. I'm long from $29 on SLV. Smiddy obviously is well connected in the gold space and knows a lot about metals. So, let's talk about it. Let's talk about what you've seen in silver, because that's been what everybody was talking about, going into all of this with Fed repos, right? A lot of these different complexes, the banks, and how they are potentially complicit in some of this. So, I'll let you kind of dive into that because you're the one that's been looking into it.
Right. So from the retail demand side, we're seeing continued pretty much all-time highs traffic and volume of in calls, people calling in saying they want metal. So for anyone who knows sales, you've got outbound, you've got inbound. Outbound's the harder calls, inbound's the kind of the easy money. we are continuing to see very, very high traffic on the inbound side, which tells us retail demand is not, they're not exhausted yet. They still want to move money into the metals market, which again, are we done with this move? Or hey, gold 10,000, Peter Schiff will be a happy guy. Not quite as happy as my friend over here, but he'll be a happy guy. Because they've been calling for it for so long, It's always tough with the metals complex too. When they get it right, they've got to pound their chest a little bit, even if it took 20 years. So that said, the big topic of conversation was are the banks short? Are the banks getting margin called? Is there some tinfoil hat conspiracy theory to keep the paper price of silver suppressed? And I'm not going to speculate on whether there is or isn't, right? I'm going to let you guys.
Let's talk about that first, though. So for those that don't understand, there is a interesting correlation between physical silver and paper silver. Can you talk a bit about the difference between the two and what the multiple is?
Right, absolutely. So think about it in the sense of, and this gets into backwardation and contango, right? But in the futures market, you're usually willing to delay gratification on either side. Right. So most folks are using that to hedge their book, hedge their business, whether you're a silver miner or a dealer, right? You may be using futures to actually hedge there. People who want physical silver are willing to pay the premium because they want it today. I'm not worried about the future price of silver. I want to put silver in my safe now. So when you go to the store and they say, this is real price, this is spot price versus the paper price, and there's this big, arbitrage gap there, there's a problem. Because that same dealer, when they are no longer willing to transact physical, those futures pricing kind of becomes irrelevant. And so what we were seeing in physical markets is that people in other countries, especially, what were the big markets? I think it was Hong Kong. We had someone out there.
Hong Kong was big.
Yep, Hong Kong. I think that was VS, big shout out to VS in the room. I want to say it was $30 over.
Yeah, he's got a massive long metals book right now.
Right. Yep. And he and I have been talking about this for months, man. So, I want to say out in Saudi Arabia, it was about $50 over spot. So I think they were paying $130 US per ounce of silver. And the spot price here in the States was when we were cracking, I think 75 in the futures. And then I don't know the exact pricing on Shanghai market, but I do recall seeing that their physical price was higher than the futures traded price. So all that said, there are people in the market who are saying, no, I need this now. I don't care what future price is. I need it now. That to me says something about the actual demand. Now, when you get into the numbers of it, and I'm going to go ahead and preface this with, I just pulled a lot of this from AI so I can cap it pretty quickly, so we don't have to go into all the sources cited, et cetera. So take it with a grain of salt. This is all from Gemini. We produce about, and this is from last year's, 820 million ounces of silver a year. Between all of and that's globally, between all of the industries that consume it, those guys consume 680 million ounces a year. And that's silver that we don't see back. Those are going into Tomahawk missiles, medical equipment, water purification, electronics, you name it. There's some silver in there. That's where it's going. 680 million ounces went into that in 2024. Now, retail bought about 190 million ounces. This leaves us with a pretty significant deficit on what we produce versus what we all consumed. Silver that goes into retail's hand doesn't tend to come back on market. Last year was the down year. 23 and 24, or 2023 and 22, we actually had much higher rates of retail consumption. Where's the silver going? That said, I want to say the outstanding open interest in futures market represents 533 million ounces of silver. That covers a lot of the production silver that goes into equipment, etc. There's still a big unspoken for gap there. Many of those manufacturers are probably clever enough to buy in bulk and, they're getting good deals, etc. My concern is all that silver that goes into the hands of retail that never sees the light of day, because people who buy metals tend to stack it similar to the crypto crowd. Yeah. They put that in a safe.
It, crypto we put on a cold storage wallet, silver you're putting in a vault.
Yeah, you never see it. And for a lot of folks, they all live side by side in a dark, metal box that never gets opened. But that's a big thing with the silvers. Silver buyers especially. I have seen one friend of mine who had a significant silver position who went and said he took it in and cashed it out today. I didn't ask what price he got. But what I will also note is that I'm seeing reports of pawn shops really unwilling to even pay anywhere close to futures price. People who have dealt in metals for a long time know that the day that you go to sell your metals back to a dealer, they're never offering you spot price. They're always offering under. That's the spread that they need to make money. So as the retail holder, really your incentive is to stack this as conservation of buying power. Like I mentioned earlier, I don't like to give Peter Schiff a whole lot of kudos and credit. I really am not a big fan of that guy, but that said, he's been right, and all of the metals people are running their parades and saying like, oh, I was right, this that. Well, congratulations. You missed the AI trade, you missed the robot trade, you missed Bitcoin and the crypto trade. So it's also tough in that sense too, where it's like, hey, these guys are having their day, let them have their day in the sun, but that market will come back around. And whether it's 2 years or 5, I think that this is getting a little frothy. I'm cautious along the metals, but again, buying pullbacks has worked. I think you need to be a little patient.
Yeah. This last one caught everyone off. I mean, we got the initial sell and some of it, and everyone's like, this is going to be the greatest short ever. You had one day, and then right back up. And today we're back at all-time highs on silver. Right back up to where it was, and some.
And gold. Gold crashed.
Yeah, gold too. Gold had a fat bid in it at one point today.
Well, I've got actually futures gold highs at what is this, 45.81. So we've got a little ways
I don't think you're quite there. The gold, but it did have a nice bid. Silver, on the other hand, I mean, silver futures still has a little bit higher to go before it hits the all-time high. But if you look at SLV, which I know is not your favorite proxy, but SLV all-time highs, right? I wanted to, and not to derail your thought here, but I was curious. I went and kind of looked up what people were talking about with the price of silver, and again, you have what I've learned, and obviously everyone knows this on FinTwit, but you have a lot of things that get said. I am not the most well-versed person when it comes to the metals, right? I understand their importance. I understand why I went long, all of them and all of that. But when it comes to how all of it gets traded like that, I'll be honest, it's not an area of focus for me. That's obviously where you come in. So take what I say here with a grain of salt, because it's just stuff that I've pulled. But they were talking about how the physical price of an ounce of silver was what, $70, 71, whatever. I don't know where the futures are at now, but at the time, this was early, a couple days ago. Japan, it was 130, and in China, the number was 110, and people were talking about that discrepancy and how wild that is between paper and the actual physical. Which, again, I don't know enough about this to speak on it, but I was just like, damn, that seems like a pretty healthy discrepancy between what it is. Like, what would make someone want to go and buy that when they just buy the futures, right? Just go by the futures then if it's cheaper than the physical, then just ask for it to be delivered. But I also don't know how that works either. Can you actually get physical silver futures delivered?
Yeah, you can. You can get silver and gold. The issue is that it usually needs to be in quantities that are pretty significant. I want to say for gold on a single contract, you have to have a 400 ounce. What is it? A London Metals Exchange bar delivered. So it's a pretty significant chunk of money to outlay to have a paperweight delivered to your house to put into a safe. And that's that is why people tend to then go through. And I'm not sure what the physical delivery side looks like when you say, hey, I need you guys, to deliver this from your vault to my vault. I don't know what that process looks like. I'm sure it's as simple as, we're going to have to get an armored truck and we do the whole same as moving a big amount of cash. But I don't think it's very common. I don't think that physical delivery is common unless you are actually.
I think people that want physical will just go buy it from someplace, like similar to how people want gold, they could buy it from your guys. Silver, there's plenty of online depots you could go to. Again, I'm talking as like the average person, similar you're saying retail, because I know that the big players are all short this shit up the ass. So that's a totally different piece that we'll get into in a sec. But that's why I was just kind of curious, because I don't know. And there's just a lot of hype. Like the thing that's been difficult for me is the misinformation on this. I don't know what's actually true and what's not because I'm not well versed in it. And going down that rabbit hole, I've seen like 6 different conclusions being drawn from all of this, like being like, oh, well, it's not 130 and 110 there. You could go buy it from a depot out there and it's only a couple dollars above spot. Like it's not that big of a discrepancy and so on and so forth. and others being like, no, that's not how it works. Like they're not going to a depot. You know what I mean? So it's been tough to kind of decipher all of it. And then the banks add a whole nother layer to this, which is crazy. So
yeah, well, we know those guys are shiesty. And here's what I'll say. So I do have some great inside sources, but even talking to those guys, you know, what's the old saying? If a man's salary depends on him not noticing something, he's certainly not going to notice it. It's kind of one of these. These guys don't ever want to say like, hey, there's a problem in the precious metals market, whether it's a good or bad problem for them. They want to be like, no, you should buy more precious metals. So that's always difficult. When I'm looking at metals analysts, a lot of them come from the buy side. I don't see a lot of metals sell side analysts. So I do take a lot of that with a grain of salt as well, because I think many people don't know what's going on. You have no idea how, you know, the U.S. Mint has to hedge, or, you know, Sunshine Mint needs to hedge silver production. We just couldn't know that.
The fear mongering that I've seen on X specifically has been gnarly. So like I pulled this up because I want you to give me your take on it, but it says right here, they were talking about the banks. Now, I don't know if you're finished with your thought, but the banks, the big thing that was circulating prior to all of this, right, with the silver stuff, was that there was a bank that started this catalyst, was going under, right? You saw that rumor. So for those that weren't paying attention during this time, there was this thing that kind of circulated again. It's on X, it's on Twitter, that a bank was going to go under. And basically the Fed kind of had to step in, and they did like a repo to inject liquidity. But they were talking about how it was a big bank, and now they're going to stifle silver pricing because of the short position that all these banks carried. And they basically got margin called. Now, when I started going down that rabbit hole a little bit to understand it, that's when shit went nuts for me, because there is so much information or misinformation, and I couldn't tell you what was true, what was fact, what was not. The odd part to me, more than anything else, was there's no like this. It's the source. Trust me, bro. Right? Like that's how I read most of this. It's like, okay, where'd you get that information? Right? Where did you get this? And then some people are like, oh, it's UBS. So I texted my buddy at UBS. I'm like, hey, are you out of a job because your bank's going under? And he's like, what the fuck are you talking about? And I obviously was half joking with him, but that you would have assumed that was what was going on. People were talking like this was the doomsday of the year, and people still are talking in that way. Silver is going to be the entire thing that we talk about for 2026.
I heard people saying it's going to bury JP Morgan.
Which is wild.
I don't like to speak in absolutes. I'm going to go ahead and speak in an absolute here. That will never fucking happen. The day that silver buries JP Morgan, pack it all up and move to the woods, man. I don't think that everyone will be so fucked at that point. So I think you better have rations and ammunition tucked away in a bunker somewhere if that's the case, because that means the American financial system has fucking collapsed. It's
completely, we're all at that point, like to your point, we're all fucked. Nothing that we're talking about now and everything else matters if that happens. So, but like, okay, I'm looking at this. I'm looking at some of the most viewed posts that like started to spur this fear mongering, because and the reason I bring it up is so many people I know, like in the room and stuff, started to short silver because of all of this. And we're like, some of them got paid. I think some of them still held and are kind of underwater right now. But this says right here, this was viewed by over 1 million people. Okay. It's suggested that B of A is short 1 billion ounces of silver, and Citi is short 3.4 billion ounces of silver, which in total would be more than the entire physical supply of silver.
Yeah. It gets to a point where someone in the risk department would have had to have stepped in, especially going into the holidays, and said, hey guys, we got basically 2 weeks of nothing volume. And there are plenty of threads. Anyone listening, go dive into the Twitter rabbit hole of people who talk about this. And the bit to cover on some of those short positions was when people were really getting into the weeds of, let's say they're short that many ounces of silver. How many days would it actually take them to cover? The bank would never be that upside down on a position. Not P&L wise, but I'm talking, I don't think that they could physically be short something that couldn't be covered without catastrophe. I just don't, I cannot imagine that they would allow that amount of risk.
let me remind
2008 again. Yeah.
Let me remind you of something. There's this thing called 2008. Nobody thought something could happen, and it could. So that's why the only reason I say that is because we're at this point where I don't know 100% what's true. If I go actually look at what we call Sharpies, right? CFTC participation and COT reports. They're talking about what people are actually short on COMEX, right? Silver. And what I have from my data is like they're short roughly 100 to 200 million ounces or so, which is, totally different than billions and billions of ounces, right? Which changes everything. Now, again, I don't know how this might not be their whole exposure. We don't know how they hedge and all of it. But I will say this. I will never say never, regardless of what I think is probably bullshit or fluffed up on whatever I read, only because I know there's so much manipulation that goes on behind the scenes, and there's so much risk that gets taken that should not be taken. And we are always prone to some type of blow up where it wouldn't be surprising if these numbers were even remotely correct. To be honest with you, as crazy as it does sound, what is stopping them, right? Like, you go back to 08 and think about how much risk people were taking. There was plenty of fucking flags that got raised, and it didn't matter until it already blew up. So, I don't think that we're there with this. I also don't know enough about it, as I've said multiple times now. But it's just, I just will never say never, right? That maybe some of this has a little merit, maybe some of it doesn't. But that's why, that's why I have you on.
Right. Well, and this will be my last, my parting little opinions on silver here. But two things to keep in note: we did have the RRP explosion. Right. And that was coming right into the end of the year. RRP, reverse repo, went from a few billion to like 70 plus billion, I believe it was, and now has normalized. So that could mean that somebody had, some overnight shenanigans that they were like, hey, I need to cover my ass. We're going to sort this out. RRP is one of those kind of weird black boxes that I think the only people who understand it are bankers and Jeff Snyder from Eurodollar University. So if you want to learn more about that, go dive down his rabbit hole. Yep, he's a good guy. The other side of that is N2 money supply is expanding. That is something that, that could be the liquidity kind of tailwind that drags all this higher. Markets, equities, rates, again, the dollar looks like it's primed to maybe take a little pullback. That should probably be good for risk on. So just a thought, again, that we, as much as we look at it and try to make sense of things, I think that sometimes the old keep it simple is maybe the best approach to this. And that might be where we're at. I'm like, hey, the Feds, they're doing not QE. We've got quiet.
I'll shoot you straight. I'll shoot you straight with this. I have no intention of selling my silver position anytime soon. I'm probably just going to run this shit, even if they run it back a little bit. This is a longer term hold for me. Like, I think, I'll be honest, when I bought this, I thought I would see this price of silver in a couple years. So, talking about it today has been really difficult, because what I should have really done, honestly, is converted my equity into a bunch of leaps, Ranchero style. And, that would have given me a lot more upside and a lot more value from what I bought. But I have such a deep buffer now, being in at, $29. The thing is, I don't own it.
Right.
I don't own it. It's just it's a silver's trust, right? So that's the only thing that people will always say. And I'm like, yeah, but I'm not really trying to own physical silver. I'm just trying to make profit off of this. And the squeeze has been excellent. Excellent. So, but I appreciate your thoughts and insight on that. Cause again, I've just recently started dealing more with the metals, just because you had to. The move was so nasty that I started trading way more gold futures and everything like that than I probably ever have before.
Right. It's a fun trade, honestly. And I think it trades a little different than maybe futures, a little less, I don't want to say schizophrenic, but sometimes there's a lot more rhyme and reason between commodity trades. And it's a little easier to take a longer term swing trade and say, hey, I'm going to have to sit through the pain. I have a little harder time doing that with like an AI stock. When I'm buying gold, I know what's behind it. When I go buy oil, know what's behind it. When I go buy, airship AI, I have no idea what the hell these guys do, but it might double in 2 days. So that's where I have a hard time, is I'm like, pie in the sky shit or physical commodities that everybody needs and everybody wants. That's what I like about those trades. But that gives me patience to sit through drawdown on those that I don't tend to have when I'm playing equity and option. I have a little less patience on that end. So there's my gambit on silver. Of course, anyone who wants to talk more about metals, you guys can always message and DM me on Twitter.
Join the Steam Room. Yep. Hit them there.
You can get all my insights every day.
It's fun getting his insights. Trust me. All right. Well, that's a good way to pivot. So that handles a lot of the silver stuff that we've kind of seen, and we'll see if there's any merit to this infinite money glitch that JP Morgan and all of them, have done in silver allegedly via spoofing and using Fed repos to cover shorts. So, we'll see what plays out in 2026. But metals are definitely going to be a theme. They're definitely going to be a theme for 2026, and we'll probably cover that more when we do like our 2026 outlook. So let's pivot here, and I want to talk about and I say this nicely, my favorite thing yet. Actually, it's not even my favorite thing. It is one of my favorite things to talk about, but it's Captain Condor blowing up. And it's sad, and I'm going to, preface this by saying I mean no disrespect to David Chow and the guys that were doing this particular trade. I actually am going to miss them being on the book because it gave such great levels to trade against. Mm-hmm. Like, if you understood how Gamma works, it was so fucking nice to have him on the book at times. But just to give some context of what I'm talking about, there has been this guy in this group that has been trading 0 DTEs on the index, SPX, for probably the last 2 years. I started following it beginning of 2024. I don't know if he did the strategy in 2023, but I just know that for most of the tracking of this has come in 2024. So we're basically 2 years of this guy doing the strategy. And the idea was at the close, 5 to 10 minutes after the close, he would route a floor trade and he would sell a short iron condor, or he would put on a short iron condor for the next day on SPX. So when you wake up in the morning, the positioning would be there, and they'd basically be 0 DT contracts, right? What he was trying to do was just collect premium. The idea would be we're going to stage range bound, and we're going to stay in between the strikes that I pick. And as long as we do that, we're going to collect all of that premium. So that's what a condor is for those that don't know. If you're taking a short iron condor, the goal is to stay within a range, not break either strike at all of each side. You're basically selling a vertical call spread on one end and a vertical put spread on the other, and you don't want to break it. Then what they did was, if they lost that initial trade, they would go to what gamblers do, maybe on the roulette table, and they would martingale. So for those that don't know what martingaling is, it is doubling your entry if you lose to try to recoup your losses. So that's what they did. Anytime they'd lose, they double. So I think the initial position size would start out maybe 1,000, 2,000 contracts or so. And then when they'd lose, they double that up, and now you're up to 5. Then next is 10, then it's 20, and so on and so forth. I don't know the exact amount of positioning that he would start with. Like, I'm not in that group. I don't know, broadly speaking, exactly how they would start, whether it was, 500 to 1,000. But once the sizing got large enough from then martingaling, it became really important on the indexes because there's clear lines being drawn in the sand on the index itself. The trade, and I got to give them credit, even though they're on the cusp of blowing up a couple times, has actually been wildly successful from 2024 to September of 2025 from unofficial tracking. This is just from a group of guys that I know that have been tracking this particular trade and looking at the profit loss. I think it was up about $40 million, $50 million of them doing this trade. So that's pretty significant. Now, they had a couple close calls where they got to such size where if they lost, they'd probably blow their shit up because of the martingaling strategy. But overall, dude, it was pretty impressive. I gotta give him credit. Now, that being said, there is a lot of risk in what he is doing, and I am so surprised that he actually came out and admitted on Twitter that he was never using gamma at all, or the implications of gamma for this particular trade, which blew my mind because I was under the assumption if I was him and I was putting on the
he
size,
was the gamma master.
Right.
would
Like
have thought.
he understood
Yeah.
where we're at with Vanna, where we are at on the VIX, where we are at on the index itself. And he's trading these in a very specific manner of understanding the structure of which we're in. But that wasn't the case. He had his own models, and his own models kind of put them in certain strikes. And, you know, I don't have access to what those models were. He posted a little bit about it. And he would just take those and realize that based off martingaling that he's bound to hit. So I get that. But the fact that he wasn't paying attention to the gamma, even when they were putting it on after the fact, was nuts. Because I was like, man, if I was doing this trade, I would try to use that position and then trade against it intraday with futures of some sort or other ones. Like, oh, we got this news. Like, we're about to hit this. I need to hedge this position, do this. It's not what they did. So what this guy would do, and the people that followed him, because he sold this strategy to retail, mind you. I don't think I mentioned that, but he sold this strategy to retail people. Was they're holding it all day. So the position itself, once it's on, they're going to expiration. Doesn't matter if it breaches. It doesn't matter what the fuck happens. They hold it till end of day. And if they lose, they lose. That's when they martingale. And there's no hedging intraday. So it was touted to retail as last 5 minutes of the day is when you need to show up. You're going to put the trade on in that last 5 minutes. See you later.
You
Come
win or
back
lose.
the next day.
Yeah, win or lose.
That's it. Roll the fucking dice. Good luck. We gap up overnight because, you know, of X, Y, and Z. Oh, well. We shoot down because, you know, tariffs, fucking yen carry, whatever the hell, it don't matter. Doesn't matter. Now that you guys have some context, and I probably did a poor job of really explaining it, but the guy finally blew up. So during Christmas, and this is the craziest thing, this particular group completely blew all their shit out. So what ended up happening is they started doing the first trade. Let me try to find. I have this pulled up. I think the first trade that they put on was what day? 17th of December ish, right? I think that's when the first trade was kind of put on, or maybe it was the 19th. Okay, well, either way, it doesn't really matter. So they just started before Christmas, and on the 19th. For instance, when they had to start martingaling is when the size started to increase again during the holidays. So, you know, they put on, I think like 4,500 or so contracts on that day. Lost, right? That got breached. So now they had to come back. So the next day they come in and I think they put up, because again, it's not, in order for it to be a real true martingale, it's not the contract size that matters. It's the risk to reward kind of payout that really matters because you have to recoup the losses. So the next day they put on 15,000 contracts on, and nope, that didn't work, right? That one blew up, right? 15 to 17,000 blew up, didn't work. Then they did it again, and they added another martingale. This time though, they jumped up the bet to about, I think like 48,000, right? So now we're getting to a level where, having watched this for 2 years, it doesn't lose too much once he gets to 50. Like these 50,000 contracts because of kind of the implications surrounding them. Yeah, no, yeah, it didn't work. Not this time, blew up. Then he did, and now again, when they did the 50,000 contracts, they did this on 12/23. So it's the day before Christmas Eve and then Christmas Day. So I see this, I see they get breached. In my own head, Smid, I'm like, there is no fucking shot they're gonna martingale this for Christmas Eve. No chance. There's no way they do it. It would be incredibly stupid to do this on a day before Christmas, which is, by the way, a half trading day. It's a half day.
Mm-hmm. No, it means half the decay, dude. What do you mean? How can you lose?
But if you understand the pricing of the options or the straddle pricing, that's where they get fucked, because now on those full days, right, you have a whole range of a day for it to kind of trade through. The other days you don't. So now, whatever the distance was, let's say that the day before, and I think I have the trade. I think it was like a 60-point spread between the top and the bottom, or 50 when they did that 48K. Yeah, so they were trading the 55s by the 900s. So it's like 45, 50-point spread that they have to deal with, right? And that's for a full day. the half day completely changes everything when they do it. Now that spread decreases and it's a 68.90 and there's 69.20. So now that spread has gone down to 30 handles. Right. So you don't have as much. And that's the problem because it's a half day. And then the risk to reward changes. Now they have to take so much fucking size. And this has now become a stay alive bet. If they lose this in totality on Christmas Eve, the day before motherfucking Christmas, they lose this bet. All of 2 years worth of trades from our unofficial P&L tracker, completely blown up in a week. Gone.
What a crazy way and time to end a run like that. Into the holidays, I would be a sad person spending that next week.
I don't understand why they did it on a half day. And I don't understand why they decided to martingale this during holidays, because we all know what happens to the holidays. Big traders aren't usually around. It's retail doing most of the work, and then retail hits the buy button, right? It's kind of what happens, right? Most of the time. And that's sure enough what's happening here. So you have a low volume grind higher. And because it's slow, options premiums are not that expensive. So he's not collecting that much. Again, he's not risking as much either, but tighter range, right? And this is the part that blew my mind. He tweeted out, he goes, based on our metrics, the Santa rally only happens, I think he said 68 or 70% of the time. Don't quote me, but it's around there. And I go, well, that's pretty good probability for trading. Like a 70% hit rate on something. It's really good probability.
Take that.
Trading. I'm taking that every fucking time.
Right.
He goes like, so, it doesn't always happen. And I'm like, that logic is so motherfucking flawed, dude. Like 70% is a good number. It is so flawed to think. I would be like, yeah, I don't want to do this. I want to wait. If I'm going to martingale this shit, I want to do it when I really, really think that we have a chance. But based on their models, dude, it's not what it is. So in total, on that last day, they were up at about 100 between him and his group. They're up to about 110,000 short 0DTE contracts.
Dude, that's nuts.
Yeah. And it was nuts. They were risking $3.55 a contract to make $1.45 back. I don't think it actually would have made them take all their losses back. They would have stayed alive. But because they lost that, I think cumulative loss was just over 50 million.
And is that between the 3 days of the three?
Yeah, that's all the levels. Yeah. So I think this was what we call a level 6. So I think this was the 6th trade where they blew all this. So if you combine all the money they lost, I think it was a little over 50 million.
Man, that's a bummer. I hate to hear that, and it's kind of at the same time, it's interesting anytime you're, in a field like this and there is somebody doing something that's kind of a novel approach like that, of just saying, hey, I built the machine, we're going to trust the machine. And we've been working for over a year now on something as well that we're still tweaking the machine. And even there are days, was that Friday? I said, you know what? It's crazy that I've got this to a 85-15 and I took the 15 trade and I got fucking stopped out. What are you going to do? And the irony is the system nailed it. I was a little too stingy with my stops. What are you going to do?
Right.
That was my risk reward, but the machine worked. So that's always interesting to me, is that fortunately, we're not martingaling on what we're doing. But if we were, I think we'd have the same results. It wouldn't matter, It
was only a matter of time before he eventually blew all of it up. And it sucks that a lot of retail got caught in it without understanding
the real implications of
what they were doing, because the strategy itself is actually not bad. Right. Like there is value to selling premium on the indexes if you know what you're doing, if you understand the Greeks involved, and you understand the environment in which you're in, right? Like, I would never do it on the holidays because of the potential melt up. And then I would never do it when you're in a negative gamma regime, because even though the premium is going to be so juicy, the problem with Condor trades more so than anything is you're risking so much to make so little.
Right.
There's a lot more risk attached.
I wonder if sometimes folks look at that almost like a blackjack hand, or a poker hand where they're like, I just have to win 3 in a row, right? Just breaking it down off the 145 by 355 spread. Like if you took that trade, you got to win 3 times. That way, the 4th time you do it, doesn't matter if you blow up. But then you're back to square one. And then you got to do 3 in a row again. That said, if you can, when he gets to level 5, 6, 7 of winning on that strategy, then all of a sudden the next martingale is like, it doesn't matter, it's a free roll. I wonder if that's a bit of how the logic of that group went of, we're kind of picking up pennies in front of the steamroller. And then, those weren't pennies necessarily. It's not like they were collecting 10, 15 cents like, what was the options guy that blew up years back? I forget, option seller. I think it was optionseller.com, right? So again, seemed like they had a little more thought behind it, but I can understand that logic. And especially newer traders being like, okay, I just got to win 3 coin tosses in a row. Make it simple.
Right. And the odds are in your favor. If you have the capital to do this with whatever it is, and you're saying, okay, there's 6 to 7 levels of this. And once we get to the 7th level, like you had said, we're good. And if your data suggests, I always do this from even more so roulette. Let's say you had a roulette wheel and you had no green, it's just black and red only. And the idea is, right, in the same way, is I'm just going to constantly bet red till it hits. I'm going to martingale it up. The odds of you hitting 7 blacks and not the red in a row are, people will say, if you look at the math, I don't know what the math is, but the odds would be in your favor that that's not going to happen based on what the board is. And that's what they were betting on.
Right. So I'm going to sell you.
Right. Exactly what you're saying with the kind of the blackjack reference. You're telling people you have to do 5 minutes of work with the odds being in your favor. But the only problem being is the minute that it doesn't work and the music stops, even if it takes you 2 years and you're still in this, you're fucked. Especially if you start to see, and we know this, it's the what is it called? The hot hand fallacy, right? I'm stealing this from the Big Short movie. But there's the hot hand fallacy. It's just like, oh, this shooter is so hot. He's so hot. He's not going to miss the next shot. He's not going to make, he's not going to miss it because he's so hot right now. That's what happens in trading. You see all these wins over the last 2 years. There's only been pain a handful of times, the amount of times they've done this trade. Okay, well, I'm gonna size up. Right, I've made $100,000 on this. I'm gonna add size into this. I'm gonna continue to do that, and then it blows out. And we saw some reports from Morningstar who did something on this. I think there was a couple other outlets that picked up the story, and we're talking to a few people in the space, and there are some horror stories of people that lost their life savings. There's horror stories of people that blew up a ton of money from this. And again, you are the trader. It is on you to manage your own risk when you do this. So you can't fault someone else for their strategy and you taking it and you fucking it up. But when you don't understand the dynamics at play is when shit can go awry, and obviously that happens. So I feel for everybody. I don't necessarily fault David Chow for coming up with a strategy like this. I'm, again, still amazed he didn't pay attention to the gamma and Vanna and charm flows, which have so much importance on what happens on the index intraday. And I'm even more surprised that they weren't trying to utilize their positions for a way to hedge or manipulate things, right? If you know what the hedging dynamics are and you could get enough size, I'd be trading futures against that in some capacity. Again, we've said it before, gamma's not directional. But if you understand it, you could put odds in your favor. So I thought they were trading around these positions. Nope, not at all. So, I digress.
Well, hey, David Chow, if you're listening, Joe's going to be putting out a gamma special here soon through STEAMROOM Education. So you can sign up. He will make you a discount code for that.
Yeah, give me a buzz. We'll do some gamma conversations.
We will prevent this. One final thing on that. I got to respect the guy too for running the strategy himself. He didn't go sell them a basket of goods and not actually run it and face that same, face the music himself. So respect to that guy. You guys have seen me take some big wins and more importantly, some pretty big losses, and sharing those publicly, it sucks, man. Sucks when you have a bad year. Sucks when you have a couple bad trades that make you have a bad year. And that's probably where he's at. So, I'll be rooting for him to come back. But respect to him for being public about it and transparent. I think, especially around here, that's the name of the game. It's what we like to do in the steam room is, honesty and transparency goes a very, very long way.
Yeah, and I would implore again. I give him credit too for at least being transparent, but this is why I preach, and spent the time to learn these different flows, especially during the holidays. When you get this vol decline, right, there is, which usually happens during the holidays. You have to understand that there's mechanical flows underneath that help push you higher, right? You have Vanna and charm flows, that can really continue the move in that direction, even if it's slow. If you don't understand that, then it don't really matter, especially because there are only 5 wide condors. The delta hedging impact is minimal for that. Like, they still have to hedge it. There's, especially with that kind of size, but it's not like they're 50 wide and there's so much delta that has to be absorbed or hedged by market makers. It's just understanding like the structure of everything. So, and there was a really good thread that Vol Signals on Twitter wrote up about this, and he's brilliant when it comes to the gamma side of things. A lot of respect, and he's super smart. So, if you guys want to go look at some of his threads that he's posted on this, highly recommend that.
And their new product rolling out soon is pretty cool. So worth a little check out.
Nice guys. That being said, Smid, I think we can we cut it here. We covered our couple topics that we wanted to across the board. I think next week, we're gonna try to do some 2026 stuff unless something crazy happens in the index. Just kind of talk about what we're looking at, what we see, and then maybe go through some funny predictions that we can pull from some of the banks who love to change their predictions every 6 months anyway, every 2 months. Maybe some Tom Lee stuff, but hopefully you guys enjoyed, this more topic oriented, version of the podcast, and we'll get a couple more interviews going too. We have some people lined up on the on deck circle that want to come on once the holidays for them kind of subside in January, and we'll kind of go from there. So again, thank you guys for listening, and we'll catch you on the next episode. Smiddy, catch you later, brother.
Yep. Happy New Year, everybody. And I hope 2026 brings you everything you want and then some. Take care, everyone.